Enjoying a very pleasant morning here in the Silicon Valley. I don't know what it'll be today, but I'm guessing something in the 80s. Pretty nice day. First off, let's do a quick congratulations to 4 folks who closed on their first or their next rental property. Let's just do that real quick. First off, Fabian, congratulations. Shawnee, congratulations. Caleb and Jess. Caleb and Jess, you actually closed too, so congratulations to the 4 of you closing on your transactions. Congratulations. As I sit here Friday morning, really thinking about a good week for, number of closings, I just want to say a couple of things. First and foremost, we should all be congratulating folks that actually closed on their first or next rental property. But I want to sit here this Friday morning and congratulate everybody doing the work. If you followed me for any length of time, you read my book, my beliefs are fairly simple. It takes focus, which I call a buy box, and daily execution to understand what's going on in your real estate market. If you are doing the work every day, I want to congratulate you. If you're doing the work every day and writing good or great offers and not getting a deal, I want to congratulate you. And of course, if you're one of the 4 this morning, Fabian, Shawnee, Caleb, or Jess, I want to congratulate you too. But let's celebrate the folks doing the work. That's what I'm about here at One Rental at a Time. I try to lead by example. I do a daily financial news show just to show what daily discipline is. I share with you my goals on Sunday, whether they're good or bad, as examples. So again, I want to congratulate everybody doing the work. Focus and daily discipline, 10, 20 minutes a day. That's what it's about. It's not easy. It does take consistent effort. We'll talk about the housing slowdown this morning, but I just wanted to say that. And because today is Friday the 13th, I actually have what might be a crazy question. So when I was growing up, there was Friday the 13th movies or Nightmare on Elm Street. Both of these were kind of scary movies. Really, really scary versus blood and gore. I'm curious, were you a Friday the 13th fan or a Nightmare on Elm Street fan? For me, it was Freddy Krueger. That movie, especially the original, scared me. I wonder how it aged. I haven't seen it in several decades, but anyways, I digress. It's Friday the 13th. I got to thinking, is it Elm Street or Friday the 13th for you? Let me know below. Just have some fun. It's Friday the 13th. I might actually watch one of them tonight. Let me know what you think. So as we're talking about the housing slowdown, I would just like to kind of show you what it means. And again, these are national numbers. You should figure out your market, your buy box. Your market, your buy box could be different. But this is what a national housing slowdown feels like. Okay, so last year, days on market for listings was 35 days, which, oh, by the way, is faster than normal. Normal is about 47, 48, 51, something like that. So 35 days was still relatively fast. What we had in June of this year, like 2 months ago, all the way down to 15 days. That is nuts. I don't recall any time in my 20 years being under 21 days, and that includes the nuttiness of 05 and 06. However, as we sit here in early August, the late July numbers, 17 days on market. So first off, we went from 15 to 17 days, so that's 10% longer. But it's still 17 days where last year we were 35. So we are half of what last year was. But this is how a housing slowdown starts. Days on market creeps up. The price drops creep up. Product comes back on the market because the buyer gets buyer fatigue or remorse or whatever you want to call that. I can't tell if that sun is a problem or not. Let's turn it this way. All right, so that's again where we're at. The slowdown will continue. Days on market will creep up. Price drops will continue. Your market, your buy box may be different, but it is happening nationally. It looks like we are going to have an interesting theater around this additional $1 billion kind of bipartisan spending, as well as this $3.5 trillion soft infrastructure, whatever is being called. It appears we have Democrats kind of fighting it out. We have one side wanting everything together. We have one side saying we're not going to vote on the 3.5 unless you pass the 1. This is just starting. Apparently there's 9 Democrats saying we are not going to vote on the 3.5 unless you pass the 1 trillion first, right? The bipartisan thing, which is going to be an interesting discussion because I believe the House only has 4 votes to play with to try to get this passed as a Democrat majority. So it will be interesting to watch, see how this plays out in the next several weeks and likely several months. But yeah, we're talking about spending $3.5 to $4.5 additional trillion dollars. Crazy. And we think inflation is hot now. Just wait. Looking at real estate around the world, looks like Hong Kong, which is often called the most expensive real estate market in the world, is up 8.6% just since January 1st. I found that to be pretty surprising because there's a lot of political turmoil going on in Hong Kong. I would have thought some of the threats from China would kind of calm it down, but yet up another 8.6%. Another very hot market we've talked about on this channel a couple of times is New Zealand. New Zealand is just smoking, up 31 months in a row. If you actually are watching this from New Zealand, I would love to hear from you. Let me know what's going on there. Leave some comments, a link. Maybe let's connect. I'd love to talk to someone investing in New Zealand. That would be really cool. Looks like there's a survey done in Europe about kind of their economy and what their consumers are expecting. If you don't know, Europe has kind of had starts and stops with lockdowns and anything. So it's interesting to see what Europe consumers are thinking. And it looks like over 1/4, so 27%, expected to take longer than a year to get back to normal. Again, I'm confused what normal is at this point. I think I forgot what 2019 felt like. But yes, about 1/4 of them feel like it'll take more than a year to get back to normal. That is interesting because that's, for me, that's spending, that's vacations, that's travel, that's all these things that we took for granted in 19. They're starting and stopping in 2021. So it's interesting to look at. If you're not aware of this, it looks like China is locking down more cities again. They are now locking down, I think it's the second largest port in China, which will mean that shipping and bottlenecks and supply chains will be disrupted on the West Coast again. And because of that, it looks like their GDP numbers have come down significantly. It looks like they were expected to have a Q3 GDP growth of almost 6%. It has now been whacked in a half, 2.3%. Folks, not out of this yet. I wish I could tell you we were. A couple of earnings announcements came out that are worth paying attention to. The first one, Disney. Disney crushed. They beat top and bottom. Top means revenue, bottom means earnings. Really beat all around. Theme parks, profitable. Disney Plus still growing. Talk about great timing. They rolled that out. But they did warn that the Delta variant could cause significant problems in the second half, which is going to become a theme, I think, for companies in the consumer space. Airbnb beat top and bottom, but actually warned of an uncertain second half. DoorDash beat top line, which means they beat revenue, but they missed bottom. They had order volume up 70%, but their marketing cost skyrocketed, and we'll talk about that in a minute. Rocket companies, if you don't know who Rocket is, they're basically a mortgage loan originator. Think Quicken Loans. They missed top, missed bottom, but gave an upbeat forecast for the current quarter. I don't know. Really? You missed Q2 revenue and earnings, but you told me Q3 is going to be better? Really? I don't know. Doesn't feel right to me, but we shall see. Then there's Context Logic. I didn't know who they were. They're basically, Wish is their app, I believe. So they missed top and bottom as well. They had fewer users, fewer active buyers, and higher marketing costs. Ouch. I checked out their stock this morning, down 27% pre-market. I don't know what it's doing in market. Their symbol is Wish if you want to look it up. Looks like the Philadelphia Fed survey has been asking what they think inflation will be over 5 years. I'm not sure if this surprised me or not. Let me think. this actually did surprise me. The expectation for inflation for 5 years running is 2.4%. That is interesting because if you know the Fed's target is 2%, but they're willing to run hot for a little bit. They're calling it transitory. I don't know about you, but 5% is not transitory. This number surprised me a couple of ways. First, I think it's going to be higher. I think inflation over 5 years will probably be much closer to 3%, maybe 3.1. I think they are underestimating the impact of wage inflation, the fact that wages are inelastic, not elastic, and the ripple effect of higher rents and housing costs and gas and healthcare and all of those things, childcare. And then I was surprised that the expectations was north of the Fed's 2.4, so pretty cool. What we need to be asking ourselves right now, and I challenged you with this a couple weeks ago, is to think about, was Q2 peak growth? Have we seen the peak in earnings, the peak in revenue? Are we now throttling back? We're not having as much stimulus money. We're not spending as much savings. We're not rushing to take vacations. Are we going to go and conserve as we get into the fall and winter? These are things to think about. I don't know if you know this, but Adidas bought Reebok. These are shoes, I guess, or brands. So Adidas bought Reebok in 2006 for $3.8 billion in cash, or at least mainly cash, a little bit of debt. Fast forward to 2021, right now, they're selling it for $2.5 billion. That is going to be a write-off of $1.3 billion. I would say that acquisition didn't work out. They're actually selling it to Authentic Brands. If you don't know who Authentic Brands are, they are the company that is building a portfolio of, brands that went bust. That's what they're doing. Back to Airbnb and DoorDash. Some numbers that came out in their earnings announcements that we should pay attention to is their marketing, sales and marketing costs. At Airbnb, they jumped 175%, and at DoorDash, 154%. They're basically finding it harder and more expensive to attract hosts and or drivers, I guess, DoorDash delivery folks. So it is not about demand, it is about the supply, which they are having to significantly increase marketing costs for. Back to school shopping. I really do hope kids go back to school. I think the distance learning or Zoom learning is not good for anyone. Got some notes about college kids. College kids look like they are going to be spending on average $1,200 going back to school. That's a 13% year-on-year increase. And that's a $71 billion market. I had no idea. Looks like the winners will be Kohl's, Target, Bed Bath & Beyond. Not sure if you're aware of this, but there's actually going to be a test of the movie theater industry this weekend. There's a movie coming out called Free Guy. Haven't heard much about it, but apparently it is a strictly theatrical release that is a new concept. So it's not Fast and the Furious 9 or Quiet Place 2. It doesn't have a brand already. So we're going to see. And basically what people are saying is if it does over 20 million this weekend, theaters are back. But if it misses, streaming services, Delta variant is crushing theaters. So it will be interesting to see what happens on Monday, or I guess late Sunday they report these numbers, because I would expect it to impact AMC and Regal and other theaters. Again, Free Guy, 20 million bucks is the number. I have a sneaky suspicion they're going to miss horrifically. I'm going to call 14 million, and I'm just making up stuff and guessing. If you want to guess, leave a number below. Over under is 20. Let me know if you're going to take the over or the under. New York Supreme Court, New York, the big blue state, has blocked, called it unconstitutional, New York unconstitutional, part of the eviction moratorium on landlords. They have blocked or decertified, or whatever the legal speak is, a clause in the eviction moratorium that allows tenants to self-certify. They are saying that that is not part of the process. The landlords should have the ability to challenge. No one person could be their own judge and jury, according to the New York Supreme Court. We are starting to see these eviction moratoriums be called unconstitutional. as they are. Next up, where is the D.C. judge? If you know, I think it was on Tuesday we talked, right? Last Tuesday, CDC did their thing. Wednesday, lawsuits were filed. Last Friday, arguments were made. On Monday, the judge asked some questions, and she said, I will have a ruling shortly. Well, Tuesday came and went. Wednesday came and went. Thursday came and went. I'm hoping for her verdict or ruling or whatever you call it today. We shall see, because this will be appealed no matter who wins and end up in the Supreme Court's hands again. And then we find out if the Supreme Court is going to sit on their ass and wait to come back in session, or if they are going to do what they should have done the first time and call it unconstitutional. We shall see. Get your popcorn ready. And then lastly, I did a video yesterday with the three amigos, Dion and Matt, where we talked about the crazy behavior today of bidding on rentals. I've never seen that before. I just want to remind you that unfortunately supply is going to go down, rents are going to go up, and it's going to be harder to qualify for rentals going forward. This is going to happen. When you mess with the system pushes back. And yes, we are going to have less affordable rentals. The rents are going to be significantly higher, and it is going to be a lot harder to qualify. Then the last thing I found is there's been lots of talk about lumber. Looks like 50% of lumber dealers at the end of July, so like 2 weeks ago, 50% of lumber dealers had excess supply. So lumber has gone through its run up and down. Now there is an oversupply at the dealer level, so we can move on and talk about other things. So again, Friday the 13th, are you a Freddy Krueger? I think Freddy Krueger, or Jason from Friday the 13th. Which one was more scary? Leave comments below. Have a great weekend. Today's Friday, so we should be talking with Stephen Dow from Velocity Mortgage. I'm going to talk to Lumberjack on his channel, and we'll talk with Ty about the weekly wrap-up. So lots of discussions today. Have a wonderful Friday. Remember, congratulate the people that got deals, but also the people doing the work. Take care, everyone. Bye.